Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we are joined by Tim Picciott of the Liberty Advisor. And as we hear so many people talk about this bull market, we're going to see the stock market climb and rally far into the future. We saw the bottom. Don't worry, everything's all fine, everything's all dandy. We're totally not worried about any second wave shutdown or anything like that. While people talk about how strong the dollar is and how it's only going up from here, which is insanity, and that we won't see a major crash anytime soon, we know that the reality is far more complicated than that, to say the least. So we're going to go into all this today, but first I want to get into this article by the Felder Report called "The Biggest Disconnect Between Prices and Profits in Stock Market History." And as the article goes into here, it says everyone is talking about the massive disparity between the stock prices and fundamentals right now. To paraphrase Jeremy Grantham, we now find ourselves in the top 1% of stock market valuations and the bottom 1% of economic outcomes based on the annualized rate of decline in second quarter GDP. A popular way to demonstrate this gap is seen in the chart below, which plots total equity values along with total corporate profits. That's quite interesting, to say the least. We got the chart up on the screen, and as it continues, it says, at first glance, it appears this is the biggest disconnect between prices and profits in at least 30 years. However, if we turn this into a price to earnings ratio, it becomes clear that the stock market bubble of 20 years ago actually takes the cake. But what a simple price to earnings ratio doesn't account for is the fact that dot-com bubble appears so severe in the chart above, largely because profit margins were relatively depressed at the time. Furthermore, profit margins in recent years became extremely inflated. This serves to make stock prices over the past few years look less expensive than they otherwise would. So if we normalize profit margins, hat tip John Hussman, we can see that stock prices today are more expensive than they were 20 years ago at the peak of the dot-com mania. It turns out that the current disconnect between stock prices and sustainable profits is, in fact, greater than anything we have seen in modern history. The last time we saw prices and earnings disconnect in such an extreme way famously led to a lost decade for the stock market from 2000 to 2010. It is unreasonable to think the current extreme in valuations could lead to another lost decade, especially if profit margins are only beginning to revert to their historical mean. So we're going to go into this with Tim and more, but first make sure to hit that like button and share this on social media, get around the shadow banning, and more importantly than ever, join us on Flote.app as well as BitChute. If you're still watching this on YouTube, there's not much of a point in that anymore. Make sure to move over to the alternatives. Anyway, Tim, now that we got that out of the way, what can you break this down for the audience and tell people why this is significant? Because obviously this whole year has just been making history, one month after another. Can you go into this a little bit?
Yeah, thanks, Josh. And it's been probably about 2 weeks since I've done a video on financial stuff, and there's been a lot of financial stuff going on. But you take a look at what's really going on right now. At the beginning of the year, the stock market was way overvalued, in my opinion, and now it's even, that makes that look like nothing. I mean, you've got, if we go back to that chart, you had a situation where the corporate profits are absolutely tanking, and at the same time, the stock valuations are rising. And it's setting people up, I think, for a potential disaster. And you've got all these, different retirees, and really, I mean, there's so many different ways to tackle this. I mean, one thing is there's another ratio they didn't talk about called the CAPE ratio. Right. That's the cyclically adjusted price to earnings ratio. And essentially what they're doing there, like the skip to the end version of this, is the higher that number, basically the lower the average return is going to be over the next decade. And so it shows when it's in like the bottom quintile, the top quintile, and I can't remember off the top of my head, but it's like, I think when you're in like the least expensive, it earns like well over 10% a year, but when you're in the top decile of being expensive, it's only like 2% a year. And so you combine that with the fact that bonds are paying nothing, and what that means is it's not going to go like in a straight 2% a year. What it means is it's probably going to get like absolutely walloped in 1 year, and then finally keep like creeping back up and up and up. But if you are 65 years old, you don't have the time to have that. You can't just wait 10 years. And if you're a part of the pension system, whereas in 2008 the pension system, not the average, but the oldest baby boomer was 62 years old. Right. So now they're 74, 75 years old. They're having to take money out of their retirement accounts, and they don't have 10 years to just like go and like wait this out. And so that's why the Fed had to go kind of skip it around here to the corporate bond market. That's why the Fed had to come in and buy up the corporate bonds. And this was like a key tenet of something we talked about at my Acapulco speech, which you guys can find on Josh's channel as well as my channel. And what I was talking about was you had like in the during the 2008 crisis, you didn't really have a huge explosion of ETFs. It wasn't as nearly as proliferating as they are today. And so what's going on now is you have about half of the bond market was only one step away from junk, and then you had all these other junk bonds. And so when you had these, historically you see about 20-30% of companies go from being investment grade down into junk, and that was then going to create a forced selling because now the ETFs that were investment grade ETFs now could not actually hold on to those bonds. And so now that the Fed actually came in and started buying up those bonds to different types of facilities that they have, and then leveraging that 10-1 on investment grade bonds, 7-1 on junk bonds. In one case, you have BlackRock who's actually going and selling the bonds, and they're getting the commission on it. So they're selling their own dog crap, getting it off their books. And so if you're taking a risk and there's no more price discovery, and it's just like there's so many things going on in my mind right now because we're not scripting any of this out right now, and it's almost like I don't even know where to begin because it's so crazy. And so we right now are heavy into cash. We have clients who have, we work with Bitcoin holdings, crypto holdings, making sure they're gonna be able to prepare for this. But we didn't, we were down at the worst of it, 3.5 to 5%, and then now most of our clients are even or above 2-3% gains, not necessarily even including their Bitcoin or crypto holdings. And so we are in the position we don't need to play catch up right now, and I want to wait till the numbers kind of swing in our favor a little bit more. But if you're close to retirement or already retired, this is not, going and listening to, what's that guy's name, like Dave Portnoy or whatever. You're taking such a huge gamble, not investment advice, but there's so many people that are just doing, it's almost like that we're at like the shoe shine boy level of, and that's not to say,
Right. Well, no, that's a perfect example. The shoe shine boy part where, they end up selling everything off. You go get your shoe shine and a shoe shine boy is telling you what to invest in. Honestly, that's most of YouTube right now, but, and CNBC and Fox and CNN, but I wanted to mention, and I've said it quite a few times before, that if you were to have Black Mirror and the Twilight Zone have a baby, it would be 2020. The tyranny is predictable, but the reaction isn't as predictable. So it seems almost impossible or futile to bother trying to predict what is going to come next for the stock market, because obviously the Fed is printing insane amount of money. We've never seen anything like this before.
Can I get into that? So it took the country from 1913 to 2008 to have a Fed have roughly a balance sheet of about $800 billion. Then from 2008 to late 2014, I think it got up to about $4.2 trillion. Then it shrank to $3.6 trillion. I was saying all along that there's no way it's going back to zero. And it's sort of like the Fed was like a 600-pound person that lost 5 pounds, taking a victory lap, saying if we ever lose any more weight, we're going to die over here. And then it goes from, in the span of like mid-February to the end of April, goes from like 3.6 to over double. Right. So it goes literally from the history of, Family Channel, so I won't swear here. The history of the United States to get to, from the beginning to 2019 to get to 3.6, and only 2 months to double that. Yeah. And that's only papering things over to get this temporary, what other people are calling one of the biggest bear market rallies of all time. I think people are getting suckered in. You're seeing the sheeple getting back into the market. And while at the same time, high net worth investors, even guys like Jim Cramer, are talking about investing in gold now. And, these are guys who are not, fans of gold. These are not guys who are normally thinking about this. But there's other bigger issues going on.
Well, yeah, and then you have people with their masks wandering onto the stock exchange to go throw a bunch of money at companies that were overvalued to begin with, crashed dramatically, and now they're just trying to make money off of the rally up, thinking that this isn't going to happen again and possibly harder. Honestly, to prop up a bubble that burst, but not entirely, to the extent that it did, to try and prop up a market that was already a bubble. We saw it collapse, but it didn't collapse all the way, and people are just continuing to prop up that bubble. It's like in a lot of ways, it's like what we saw in 2008, where we saw the bubble burst, but they still kept trying to prop it up. Fed money was thrown at it.
This is that on like steroids. You're seeing now about 47% of people who are talking about. When Josh and I are like a weird little hill here with like roots here, so that's why I'm like kind of moving around. That's why he's suddenly taller than me. It's just pure madness. I mean, I don't know if we want to maybe get into like another video where we get into the mask in Arizona, because I came from. I mean, I don't know if we want to segue to a different video or cut this up.
We'll talk about that in the next video. But short synopsis.
The short synopsis is, I mean, I came from Arizona, and basically, we didn't have anyone going to get any of these, what do they call it, non-essential, surgeries or anything. And then all of a sudden, they opened it back up, and then they're saying how full everything is. Well, at the same point, we were 50th out of 50 in testing. You couldn't even go and get testing. And then you take a look at like the per 100,000 death rate, like over the past several years. And I don't have the notes right here, but it was something like 296 per 100,000 died over the same course of time period in, I think, 2016, and now it's like 300. And meanwhile, my county was the fastest growing county in America, Maricopa County. And so I mean, statistically, it's almost exactly the same. But we're in a frog boiling situation now where they're going for broke right now. I mean, these people are going. They're playing for keeps. They're trying to get mandatory vaccinations. They're trying to tying that into contact tracing. And so it's almost like it's fun and games to talk about what's going on in the stock market right now. But there's so many bigger issues. There's so many, and I feel like Obama right now with the fly.
Well, but I mean, look, there's no sugarcoating that we could possibly add to this right now. It's bad. It's going to get worse before it gets better, but it will get better, I do believe. But right now, I mean, I can't even imagine what will happen if they commit to that second lockdown, and they will. And that's another video.
We get bad for everybody. I mean, there's ways around this. I mean, here we see so many people who are off grid, solar, self-sufficient, self-reliant. Right. Ready for anything, and. It's that's freedom's the answer. What's the question? And but eventually we're going to see more freedom coming out of this, or we're going to go into a dark age where eventually it's going to be checkmated, where we're not going to be able to get out of this. And not necessarily we as the people around us in here, but we as in the average person is going to be checkmated, where you're not going to be able to talk to guys like Josh and I. You're not going to be close to us because we have opinions that are not mainstream, that the power structure doesn't want you hearing.
The nanny doesn't want you to watch that TV show because it's very, very bad. No, they're gonna basically restrict you from seeing any of our content in the future. Their nannies are literally telling people what they can or cannot think. This is, to some degree, thought crime. That's what they're saying, that we're committing thought crime here, because they're not allowing people to think a certain way, because they're not allowing people to get the information that allows them to think a certain way, and that is essentially them outlawing so-called thought crime. And they're doing that by monopolizing information online and then shadow banning and restricting people from viewing that content. And it's been happening for a long time, but we're at the bottom line of it. So make sure to stay tuned to us on other platforms like Flote.app and BitChute, because we will not be on here on YouTube much longer if you're watching us on YouTube. And the plan is to basically be off by about November 5th of 2020. Remember the 5th of November, guys. I've got a video announcement coming out on that shortly. But nonetheless,
that's assuming they don't pull the plug on everybody even before that. I mean,
right. That's why I'm just trying to get everyone over there now, because guys, we don't have much time left. But we'll be doing more videos here, and we'll get into more subjects. There's a lot to say, because this world, I mean, I feel like we're dodging meteors left and right here. So
we talk about what I dodged. So I was in Arizona, flew up here maybe like a week and a half ago. As soon as I got out of Arizona, they made a mandatory mask ban for my county. Then I'm in New York, leave New York. As soon as I leave New York, they impose a quarantine on New Yorkers. And so I've been basically 1 or 2 days a step ahead of this whole pandemic. Yeah. So it does feel great, being able to have the world.
Yeah, well, of course, we are here in New Hampshire at PorcFest 2020. I didn't mention that before. And obviously, leaving Las Vegas myself, the day after I left Las Vegas, they did the mandatory mask enforcement as well. And now they're saying that I might not even be able to travel state to state. So we'll see how that works out. This is so stupid. I'm so mentally drained from all of this, but we're going to keep on covering all this stuff. We got a lot to say, and we'll shove that into the other videos, because I have a few videos in mind that I want to go into with you, Tim. So anyway, if you want to become a client of Tim Picciott, you can go to thelibertyadvisor.com. It's linked below in the description. Check those links below, my friends. Hit that like button if you haven't already, and share on social media, my friends. I really appreciate everyone joining us today. I know Tim's chomping at the bit to carry on here, and that's good. We'll save that for the next video here. So anyway, thanks for joining us, Tim, and until next time, this is Josh Sigurdson and Tim Picciott signing out from World Alternative Media. Find the truth, be the change. Like what you see here, OM, don't forget to check the links below. GoFundMe, Patreon, Subscribestar. We really can't do it without you. We've been so insanely shadow banned, about 90% at this point, and 95% demonetized. As Susan Wojcicki, the CEO of YouTube, comes in and says that she is shutting down quote-unquote controversial content and cutting out the views on this controversial content by 70%. She's been bragging about it. We need your help more than ever in this battle for truth in information. You guys are what keeps us alive, so we really appreciate just even $1 a month makes a huge difference. If everyone could give just $1 a month, we wouldn't even have to worry about competing against a mainstream propaganda networks. You can also donate to our Bitcoin address on the screen for you to scan if you please, as well as in the comments and description. Liking and sharing makes a big difference as well, and finding us on alternative social media platforms like flote.app, that's flote.app, makes a huge difference. We're at Josh Sigurdson as well as at Wham. Flote is replacing Facebook, YouTube, Twitter, Twitch, Tumblr, Reddit, and Patreon all in one with encrypted private messaging, and of course monetization on videos for creators, live streams with super chats in crypto, and most of all, no algorithm, because at the end of the day, it's all about reach, guys. This is all about actually reaching people with the message and waking up the public. You can also find us on Instagram, Twitter, Minds, BitChute, all sorts of different platforms. Try to follow us on as many things as possible, because very soon this channel will very likely just be completely deleted from YouTube, and you'll never see us again, and you'll be stuck with only the mainstream networks. Also, come on out and see us at Anarcho Vegas 2020 in Las Vegas, Nevada in July, where such speakers such as G. Edward Griffin and many others will be speaking. You could use promo code WHAM on your VIP tickets and save 10%, as well as buy extremely cheap tickets for just $20.20. You won't find a cheaper conference than this with such amazing names. Check anarchovegas.com for more information on that. We hope to see you out there. And anyway, I really appreciate all of you guys joining us. You make it possible for us to survive in this volatile, propagandized climate. Until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.